Greetings, colleague. I hope you are well today. Hey, today's topic is on FHA versus conventional loans. What's the difference? And I get this question often from a buyer. It's like, hey, what kind of loan should I get? Well, that really isn't up to me. It really isn't up to you too much either. It's going to be based on your credit worthiness, the ability to come up with a down payment for that type of loan. So today we're talking FHA versus conventional. So I've got my notes because I write things down. So I want to make sure that every message is, nothing is missed because this is an important topic for you, the buyer. So what is an FHA loan? Okay. FHA loans are backed by the federal government. That's the big difference between FHA and conventional. It's designed to help buyers more easily qualify for a loan. It's a little less stringent. It's more lenient when it comes to credit scores and down payment, etc. It's good for first-time home buyers, and it has a lower down payment option. Okay, it's obviously if you have credit issues as well. For those of you who have bruised credit, this would be an option for you as well. Who is it good for? First-time home buyers, buyers with limited savings, and buyers with lower credit score. What is a conventional loan? It's not backed by the government. It's offered by private lenders. It typically requires stronger credit, and it's more flexible with property standards. And I'll get into more details about property standards and what FHA looks for versus conventional. It's an excellent option for financially strong buyers. Who is a conventional loan good for? Buyers with high credit scores, buyers with a larger down payment, buyers purchasing homes that might not meet FHA property guidelines. And again, we'll go over that in detail a little bit. Down payment. FHA as little as 3.5% down. With conventional loans, it really is up to you what you want to put down. Obviously, the more you put down, the less your monthly payment is. But that's going to range from 3% as a minimum for very qualified buyers, meaning good credit score and a better financial history. But it's more typical to be 5, 10, or 20% down. And we'll go over details why 20% is advantageous to put down to avoid private mortgage insurance. The important point here is one of the biggest myths in real estate is that you need 20% down to buy a home. Obviously, that's not true. It all depends on the type of loan you're getting and your credit worthiness. How about credit scores? What's the difference in credit score with FHA versus conventional? Many lenders work with buyers starting around a 580 credit for FHA. For the minimum down payment, through lender requirements vary. Okay? Conventional usually rewards higher credit with better loan terms. The more you put down, the better your credit, the better interest rate you're going to get on your mortgage. And when we're talking a 30-year mortgage here, half a point is a huge number in the long-term scheme of mortgage and mortgage interest. Many lenders look for a 620 or higher, but stronger scores often receive better interest rates. Okay? And not just for mortgages, but you realize for your insurance, for whatever you're trying to apply for, if you've got great credit, you deserve a better rate and you're going to get it. What is mortgage insurance? This is one of the biggest factors between FHA and conventional loans. For FHA, mortgage insurance is generally required. Because you're not putting 20% down, mortgage insurance is going to be part of the payment that you're making with an FHA mortgage payment. Depending on the loan terms and down payment, it can remain for many years or for the life of the loan. If we are in a market, which for the most part we are, in which values are increasing, once you reach a 20% equity in a property, which takes years, unless you're making additional payments, you will have the ability to drop the mortgage insurance. And the loan officer I set you up with can discuss that in details for you. For conventional, private mortgage insurance, or otherly known as PMI, is generally required if you put down less than 20%, but it can often be removed once you build enough equity. Okay, so as you're seeing your equity grow and your principal balance decrease, when that number becomes about a 20% difference, or you've got 20% equity, you can get with your lender and ask them to drop the PMI. The sixth point, the difference between FHA and conventional. Property requirements. This is very interesting. FHA, the home must meet certain health and safety standards. For example, peeling paint, missing handrails, safety hazards, roof issues must be addressed prior to closing for a buyer getting an FHA loan. For conventional, generally fewer property restrictions apply. Big difference there. When I have a buyer who is using an FHA loan or a VA loan, I'm looking at things extremely differently when I'm looking at the house as I would for a conventional loan buyer or a cash buyer, obviously. So big difference as far as, what we're looking for depending on the buyer and their, the loan they're getting, and what the property looks like, and if I know it will pass FHA or VA inspections. Makes a big difference. So which is better? FHA is best if you have lower credit, limited cash, first-time home buyer. Okay, if that fits you, then I would suggest you speak to the lender about FHA. Okay. For conventional, strong credit, larger down payment, and if you want to avoid long-term mortgage insurance. A lot of myths out there about the different types of loans. The first step always is going to be to speak with a lender. Because first of all, how do you know what you can afford? You really don't. You think you might know. But when you take into factoring private mortgage insurance, if you're less than 20% down, your principal and interest, and taxes and insurance, what's that bottom line? What's that PITI, as we call it? Principal, interest, tax, and insurance. What can you afford? Okay, that's what's key. And so not only is your interest rate important in this whole scheme of things, but that bottom line and the payment, your monthly payment, is what is key to you as a buyer. Hey, I hope you find that helpful. Some very simple tips about FHA versus conventional. If there's something you'd like me to discuss on one of our YouTube videos here, I'd be glad to. Make a comment below, and I'll be glad to respond and address your question. I'm John Rakowski. I help families transition to the next chapter in their life. I'd love to help you anytime you'd like. I hope you know now a little bit more about FHA versus conventional, and it's good to speak with you today via this video. Take care of yourself and each other, and be well. And thanks for listening. Peace.